Aloha, YouTube. How are all you investors doing today? My name is David Yansen. Welcome to my channel. Today is the last day for the trading day for the U.S. stock market. It is Friday, October 9th, 2020, and the U.S. stock market has been closed for a little over an hour now, and it has been a good day for the U.S. stock market as stocks finished their third day in a row. The S&P 500, the Dow, the Nasdaq all finished in the green 3 days in a row. And so October, not so bad as September, even though if you see my previous videos, you know that September was what I was calling slumpy September. But stocks were on sale, and it was a great time to add to your positions or add other companies, as a lot of companies, their stock price had dropped throughout the month of September. October at one time I thought maybe might be a mix of red and green, but 3 days in a row green. Let's hope that it continues this trend through next week. But anything can happen. We are in an election year. We have another presidential debate coming up. People are campaigning. There's stimulus talks. There's all kinds of things like that. So the stock market is going to be volatile just in general because it's an election year, and just in general, or not just in general, but also because of the global recession and the U.S. recession and everything else that we have going on in the U.S. right now. So I'm a little bit away from some of that stuff, like the hurricanes and stuff that are about to hit, Hurricane Delta that's about to hit Louisiana. So hopefully those people can be safe. And I know a lot of Louisiana has already been crushed by hurricanes through August, and now again in October, and then they've had rains, just regular rain coming through. So FEMA's going to have their work out for them. If you're able to contribute to the American Red Cross or something like that, that will definitely help those people out there in Louisiana. So but here we are looking at my dividend tracker. I use trackyourdividends.com to track my dividends. It is a free website. They do have pay portions, and I am not on the pay portion. I'm on the free portion. That's why you see some of these ads here. But if you haven't subscribed to the channel, please go ahead and do so. Also like the video if you find it informative. And feel free to share with your family and friends and everybody who continues to come back to my videos and has subscribed already. Mahalo to you. I really, really appreciate it. So you can see here, this is pretty exciting news for me. First time investing, my value is over $15,000. Originally, my first video, I believe, was like $10,000. I was like, woo, amazing. Now $15,000, which I think is great, over $15,000, and my gains is over 1,500. So being a first-time investor, first time in a recession as an investor, I've only been doing this for about 15 months. I'm very pleased with my gains and the positions that I hold, the companies that I hold. I do have a playlist broken down of my brokerages. M1 Finance, Fidelity, and Robinhood are the three main ones that I use. Of course, I do have little smaller accounts with Webull, which I basically just signed up with them for the free stocks. And so I have three positions in Webull, and then I did a review. Somebody requested a review of the public investing app, so that one I put a little bit of money into Google. And SoFi Invest, I got S&P 500 tracker VOO, so I continue to put money into that. Eventually I will get rid of that as soon as I'm allowed to, because I already have an S&P tracker ETF, IVV. So I don't see the need to have two, but it was given to me for free, so I might as well contribute to it until I have to sell it, and then I'll sell out of what I have there and put it probably in my Fidelity account, as my Roth IRA should be complete by time I'm allowed to do that. So, but check out those other videos. Everything's organized in playlist for you, as well as my dividend tracker as well too. So also, the nice thing about this dividend tracker, you can see my dividend yield, my yield on cost, and then my annual income, $349 now. And that is as everything sets as it is. Did I mention subscribing to the channel? I don't remember. Sometimes I don't say it in my videos. But if you haven't subscribed, please subscribe. Just hit the subscribe button. It's a red one there. and also hit the thumbs up like button as well too. I really appreciate it. The nice thing that I like about this website is not only do you have all of your holdings listed right here, and it shows you the ticker symbol and how many shares, your profit loss, and your annual income, but you can actually see a projection of the way that your portfolio stands. So if we go into the free tools here and I click on future value, it's going to show you all the way out to 2029, which is 9 years from now. If we scroll down some more here, it shows you what your value will be. Zoom in a little bit more here. So 2020, 15,420, and then all the way to 2029 is 20,057. So, and that's my portfolio value. That's not including any dividends that I might get along the way. So my dividend payment for 2029, as you can see, is $680. And then if we click out here to 25 years, it shows you the same thing up here. Move in some more. And it is a future estimated value, as you see, and the reason why it's estimated is because anything can happen in the next 25 years or over the next 6 months for that matter. You have Enron situations, you have GE situations, you have Ford situations where either management makes bad decisions or there's an embezzlement or fraud or something, or they just don't change fast enough. Like Ford just hasn't, along with a lot of the other American car makers, didn't move fast enough to electric vehicles, in my opinion. That's why Tesla was able to grab a hold and take off with it. Now they're trying to catch up, but General Motors and Ford just have a ton of debt right now. Who knows if they can catch up or if they're going to be still in business in 3 to 5 years, to be honest. You never know. So originally I bought into Ford. They were a big dividend paying company, and then they had to completely slash their dividend, suspend their dividend once this recession happened. Same thing happened to Disney. Disney is still a great company. In my video yesterday, I talk about possibly buying some more into Disney because their cruise ships will sail again and all their parks will be open again, more than likely to full capacity. But they have suspended their dividends, last I read. So anything can happen because of a recession or because of management, and they don't have to pay a dividend anyway. Paying a dividend to your shareholders is kind of a thank you for investing in the company, and so they pay that back to you in most cases because they don't have anything else on the horizon, or they have extra cash to be able to pay that dividend. So Apple has tons of cash around for innovation, growth, and to pay their shareholders. Same thing with Microsoft. Amazon probably could, but I know they're still in world domination mode. So, they're probably not going to do anything like that anytime soon. So, but you can see by 2044, we're looking at my dividend payment at $2,000. And being a primary dividend investor, my goal is to live off of my dividends at one point. So if every single month I'm bringing in $2,000 or $3,000, that would be completely amazing. Let's scroll down here and we'll see what my portfolio value. Right here you can see 15,000, and then we scroll over here to year 2044 and 39,000, almost $40,000 just in 25 years of my portfolio value. And again, this is as is. This is not taking into consideration that I buy into any companies, that I don't add to my holdings already as is. This is as is, that I don't add to the holdings that I have already or pick up any other companies. So if any of that happens and they pay a dividend, and most of my companies do increase their dividends, they have done so for a minimum of 25 years, that's a raise every single year. And earnings season's coming up. Pepsi has already done their earnings for this quarter. Early next year, I believe Pepsi will increase their dividend as they have done for the last 40-something years. So if you invest in companies like that and you're getting that dividend payout, this number here for your annual payment is just going to keep going up. So look at one other thing here before we end the video is my diversification, and I am well diversified in 11 sectors, as you can see, highest weighted being technology. Please subscribe to the channel and like the video if you haven't already. And I own 60 stocks. My lowest weighted is industrials, which I might pick up 3M a little bit later, and there's a couple other industrial companies that I'm looking at that I have in my Fidelity account on my watch list that I'm paying attention to. But as it is right now, I'm kind of more just trying to expand my position. So technology being the highest, and then follows after that is my ETFs, and then consumer defensive, which I prefer to be more consumer defensive just because I am in my mid 40s and retirement is knocking at my door. So, or that age I should say is knocking at my door. Not that I plan on retiring, because I really don't have enough money to retire, but at some point, you know, just naturally your body's going to slow down. You're not going to be able to do as much as you were be able to before. So thanks for checking out my video. Please share with your family and friends and subscribe if you haven't. Have a great weekend, everybody. Mahalo and aloha.